What up, guys? What a day. Get started just a second or so, let everyone trickle in. On the bright side, though, it is almost Friday. Okay, that's a valid point. Just a sec, guys. What did I just get? Oh. What up, Renee? What's going on, guys? All right, let's get started. I'm sure someone's probably still getting that ping just as they probably roll in, but what a day. I think I came on here kind of saying that I didn't expect that rally that we got yesterday off of FOMC to really last. I kind of came on here kind of mentioning that as we pretty much, I think I repeatedly said about this anchored VWAP, I was expecting that rejection. Even if we got any kind of push over the anchored VWAP there, I wasn't expecting much movement. And luckily that we just saw this entire market just reverse, and that didn't even give us any kind of follow through this morning at all. That was literally just an overnight flush, and this is the fact of what we've seen from FOMC. I don't even want to say the last time that we had FOMC. It's probably been a few times already, which we pretty much pump off of FOMC. The market gives us that night push that same day, kind of gives our hopes getting high of the market continuing to pump, and then we just wait overnight. Market digests the news and then interprets it pretty much as though it's bad news and the market needs to price in further bad data, right? Or for pretty much future economic data. So that's basically what we ended up getting. So it's nothing that came into a surprise. I kind of came on here saying that we were likely going to end up rejecting this anchored VWAP here at this 384 half. That's exactly what we did. We didn't even get a push to pretty much wick right into that anchored VWAP or get any kind of wick above it to give you a better short opportunity. No, they just literally just rug pulled it on us right even before close. Um, well, before open basically. So that's pretty much the disappointment side. The other thing about though is that today was actually just a phenomenal trend day. That's literally what you got today. I think this is kind of what you usually expect in the opposite direction of the market, right? You usually love to have a trend day in which the market's just going up nonstop. You look to pretty much buy off of VWAP, and then you just take that ride, continuing to go back up. Well, this was pretty much the flip side of that, right? You look to see those names that end up testing VWAP and rejecting off of it, and you play the downside, just pretty much inverse, right? So I couldn't say that today was more so like a choppy day where you had chop and your premium was just eaten alive. No, you had opportunity to make money today. You had a beautiful trend day. You pretty much look for your rejection spots, look to short the potential bounces on the day. And I'm sure that's exactly what Avery and the other guys were mentioning on live. So I think today was pretty much you had an opportunity was the biggest part. It's not a day where you just got stuck in a box per se and you didn't have an opportunity other than to get your premium eaten up. All right. But again, the other thing that I kind of mentioned as well, I think the past few days, not even just yesterday, but this is the time now instead of kind of panicking and saying, market's just rolling over or market's just nosediving, looking at how much things have gone down. Now is when you make that shopping list, right? I think I've been saying that for a few days. As this market just continues to roll over, look at those names where you think they have the most growth opportunity for the next bull cycle when it starts to begin. This is exactly what a lot of those fund managers are doing right now. They're looking at those names coming into key levels that they want, and they're going to buy it up for the next few years. So this is where you make your shopping list. Look for those names that you feel like are your favorites. I think I went through a list of them the other day, I think the day before yesterday, looking through a few of them, Amazon, Apple, AMD, Disney. I went through quite a few of an onslaught of those names, and I kind of gave you my personal watch list of those names. So just continue to keep that on watch. I know that another name that was kind of showing a little bit of resilience, and I think I also covered that the other day, maybe yesterday, kind of. But Boeing was one that was kind of on my watch list here that had a nice little megaphone action. It held up beautifully today through all of this volatility. I know that Avery also drew up the chart on that one in the Discord as well. So that's one that I actually do like. If we kind of get stuck in some kind of range tomorrow and the market doesn't just bleed out on us again, that may be a name that we could potentially look to see the upside outside of tech. That may end up having a nice, beautiful day for a 0 day in calls. So that's one to kind of keep on the watch. But other than that, kind of just getting back to SPY real quick. We kind of got close right enough to my target that I had sitting at this 363 half level. We just pretty much felt just shy of it before we got that little end of day reversal. We get right toward my resistance here after flushing below it 367 half. We'll see if that continues to act as a resistance here overnight. If we pop over 367 half and we get some kind of follow through, then we're looking at this gap fill that we have from today over 368. And I'm going to be looking at resistance here potentially at 372 half. So that's going to be my upside potential. I don't think we necessarily get over 372 half here tomorrow, by no means. So I'll be looking at that 372 half as a potential resistance here tomorrow. If we can pop over this 367 half, and then you got that gap fill on watch, and 372 half is going to be your resistance that I expect, and that'll likely be your top for tomorrow if we get any kind of meaningful reversal tomorrow. All right. Other than that, though, you're likely going to end up looking to see if we get resistance here right at this close at the 367 half. And we have two more levels down to my downside here, watching 363 half, and then ultimately coming down to my lower target here of 358 roughly. So 358 is kind of going to be my bottom short term here. I think that's the level that we're likely going to see our little bit of a reversal. I think everyone's looking for that mental number of 350 ideally. We'll see if that pretty much is our overstretch to the downside, because a lot of times we do overshoot to the downside rather than pretty much just go to a marquee level. All right. So it's entirely possible that we overshoot to the downside here, and that 350 mental number may very well come right into play. Randy, what's going on? Forgot to kind of just screen out there. A little bit of everything. Apple lost 130. Where do we go from here? I'll take a look at Apple for you. Let's take a look and see what we're looking at Apple. Did we actually come into my level I was watching? No, we have not came into my level just yet. So my level that I'm still watching pretty much to pick up on Apple here is 123. So that's about another $7 downside that we're watching on Apple. That 130 should act a little bit as a bounce area. Do I expect this bounce to really last? No, I don't. But I think we could pretty much retest about 132, 132 half on this bounce that we're going to get potentially. Maybe by morning we have a small gap up and we see this up to that 132 half. That'll be the spot where I look at some for resistance to potentially short. If we get any kind of further upside in the market on that, then we could see a potential bounce up all the way up towards 137 half. So that's what I'm going to be looking at. 137 half is your upside resistance there. Other resistance is 132 half. But other than that, I expect this to continue to go down. And 123 is my overall PT, in which I echo the sentiment of trying to go long, long term, whether it be shares, leaps, or pretty much calls going out further outdated. All right. So that's kind of the scenario that you're looking at, but I do expect full more downside on this one, down to that 123 at the bare minimum. But I wouldn't rule out a potential dead cat bounce, quote unquote. That's going to be a short term bounce that we're going to end up having. All right. So that's Apple. Unless anyone has any other tickers, Tesla. I haven't even looked at Tesla today, to be honest with you. That's actually one name. Kind of got a little bit preoccupied today, doing some back end work. But this is another one. I think this actually is going to continue to pretty much, I want to say, free fall, if that's the better word to use. We should see this pretty much come down towards testing 595. I think that's the level, the next level that I'm particularly watching here on Tesla. 595 half would be the level that I'm going to be looking for. That actually kind of coincides with some support to resistance that we've had through the entire stretch of November of 2020 up until breakout here that we've had to June 2021. So that's what I'm going to look at for 595 is my downside target. Otherwise, if I'm looking for resistance, I'm looking at 684 would be my potential resistance here if we get any kind of further bounce, if you want to say, to the upside. All right. So that's another one kind of on watch. I already mentioned Boeing, kind of just taking a glance at this chart in particular. I was mentioning this little megaphone action that's going on here. Watching to see this breakout here, looking for this over 137. We get a break over 137. I'm watching to play this one up towards 143. So 137 to 143, I think that's roughly about a $6 move that you're looking at in terms of upside. So that's something like I mentioned that you can see as a potential bounce play tomorrow. If the market can hold its grounds and not necessarily bleed out like we saw today, I think we can see relative strength out of Boeing compared to the entire, I want to say, tech sector for that part. So this is one I think it should be on everyone's watch list pretty high. and that'll be one that we could see some relative strength out compared to the rest of the market. All right, so that's another one to keep on alert. How did Disney actually do today? I know that Disney was another one that I've been watching as well. This one didn't do so hot, kind of just still stalling out a bit. I think upside here, you're watching to see if she can break over 90, 96. 96 would be that breakout spot to pretty much test gap fill that she has at 97 half. But you're going to be looking again, breakout over 96, and then gap fill test is at 97, 97.61 is gap fill test. And that'll be a pretty fat gap that you're going to be filling there if we can get some kind of hold our grounds here in the broader market. All right. Otherwise, then you're pretty much looking to take out the lows here of 93.10, and this continues to pretty much flush. And then larger target that I'm watching for the long term, I want to say, I'm still watching for this one to come down and close in on 86 low. 86.85 would be where I'm pretty much watching for to pretty much go long, shares, leaps, all that good stuff. All right, so that's another one still kind of on my watch list as well. Facebook got slaughtered. So Facebook actually made a new low yet again. Let's actually take a look at, I think the monthly probably be a better one to look at. Let's see if we actually have a trend line support here on this one. And I think we actually broke this already, if I'm not mistaken. Yep, she's already broken this. So she basically just cracked this monthly trendline support on Facebook. That's kind of disgusting, to be honest with you. We broke right through it today off of this low that we created. So I'll be watching for this one in terms of kind of where my PT kind of lands, in terms of where I'm looking at for ultimate risk reward. I think it's right around this 130-ish area, if I'm being completely honest. That 130 mark is looking pretty juicy. That actually looks like where you had your breakout back from January of 2017 and you had a beautiful retest here from January of 2019. I I don't want to say that it's going to be a $30 drop because that kind of looks disgusting to have a 30-point drop on Facebook. But if we're looking to pretty much retest the levels that we've had from prior breakouts and basically prior retest of supports, that's basically the level that I'm kind of watching here. You kind of actually get that eyeball of where you broke out from 2016 and then you basically retested in 2018. So that kind of tells me that we're going to end up retesting that yet again. If I'm looking for basically a short-term support though, and which this may end up being your short-term bounce, I'm looking at this one at 151 low. 151 low will likely be that bounce spot. If I kind of get a little bit of a trend line going right here, you'll see why I kind of say that and I'll change it into an orange. You see that you acted as a support or resistance here between from January, this is June of 2017. You tested as support April 2018, resistance yet again to break out January of 2019, and you tested support April 2020. So I'm inclined to say that we're going to come down to 151 low. We'll end up getting a bounce at that spot, and then we can end up retesting basically your trend line support that you broke down from. We probably retest that right around 166, and that should be a reversal right back to the downside. So I'm inclined to say you get another 10-point drop out of this one. That's a short-term buy for this, and you take that right back up to 166 into your trendline support as your resistance, and then we see that drop in continuation to the downside. So this is kind of a beautiful one. I actually like the spot in terms of identifying a specific support level of this monthly chart. That 155 should act as a the 151 should act as a very nice pivot for a nice little bounce, short term that is. All right, so I do like that one. CJ, what's going on? I haven't heard from you in a while. To 125 and 120 on Apple, 95.90. Amazon, I actually had, what was my target on Amazon actually? Actually, yeah, Amazon still got a ways to go down. Target I'm still watching on Amazon is roughly around 86. I think we can come down to about 86 on that. You have 95.90. You're actually still higher than I am on Amazon. I think this still has a lot more to close in. And that's pretty much saying in the sense that we're likely going to end up overshooting to the downside because we've seen that a number of times. You don't necessarily overshoot to the upside as much as you do to the downside, especially when you have that market volatility present. So I think that's one that you can pretty much pick it up right around that 86, 85 mark. That'll be the spot where you look to go long for the next bull cycle and you hold that for a while. But that's one I do like. Apple, you mentioned 125, 120. What was my PT that I had? Let me take a look. Yeah, I had it right around 122. 122 would be a nice spot. So 120, if we overshoot to the downside, I don't mind that at all. I'll take that at 120. That'll be a beautiful one. Been scalping SPX like crazy. Here's the only thing that I would caution you, CJ, about SPX. as we continue to pretty much go down and you see a lot of shorts continuing to press in and press in on the shorts, just be careful about that in terms of getting squeezed out. Because as you continue to get into these oversold territories, there's going to be a time where you're going to end up getting squeezed out. So, as you likely have probably profited a lot off of scalping SPX, just be cautious about that as you pretty much continue to overshoot to the downside here. Because as we get into oversold territories, you're going to get squeezed out at some point in time. And that's what I would caution you about. All right. But I don't see that being a bad problem. Today was actually definitely a beautiful day. If you shorted any bounce and doing SPX especially, like you would have made bank off of that. That was just a beautiful one. I like those strikes and selling the money at your targets, but Google split will push us up. I don't doubt that. I know that Google's really just been destroyed. I haven't looked at their chart in quite a while, if I'm being honest. I haven't looked at this one. I do see you already completed a gap. If I had to be honest, I actually see a little bit of the support level that you likely end up coming into here. Now, does that depend whether you're going to come into that immediately right now before you get that kind of run up? But 2008 kind of looks like that nice little sweet spot right around that 2K mark because that's where you made that nice little flag ending in March of last year before you had that rocket into all-time highs. So I think this is one that's still that 2K mark is kind of screaming my name here in terms of where it's going to the downside here. But if you're looking for that short-term bounce, I think your resistance that you're watching is right around this 2198 to 2200 level is what you're looking at in terms of your upside here for a short-term resistance. So if we get a bounce in the market here, which I think a lot of traders are kind of expecting that bounce now after overshooting to the downside they felt like today. I think that we get a little bit of a gap down tomorrow. Next week might be that week where we see that kind of bounce and that lead and right into the split. All right. SPX buy 3 days out, puts at higher tick, sell close to zero. You are literally right on the money. I think that's pretty much like spot on. I know it depends. Usually, like that 1,000 tick is usually that sweet spot kind of where you get that reversal and then you sell it right when it hits that zero tick. That's just a beautiful scalp. If you kind of hear Dapper and Sig on live, especially, they literally preach that. Like you usually end up you buying puts, you buy on a high tick. You're buying calls, you buy on a low tick. They kind of preach that, and you just play off of that. And that's usually what they do is just scalp all day like that. So that's something that especially you take advantage of listening on voice when they're on, is that they literally walk you through their day trades, literally just back and forth. And they'll call it out low tick, high tick, and what they're pretty much looking at and what they're scalping. So just beautiful about that. You like the 2000 and 2300 and back down after. So I'm with you on the 2000 mark. The 2300, I don't mind you overshooting. You might end up getting as high as that 2300. I'm kind of hard pressed to say 2300. I think you get close enough to about 2350, 2260. I think might be your upside. Only because I say that you might be a little bit more limited in this kind of market environment. I would have said that 2300 mark if this was a little bit more calm. I think with the volatility index so high, I don't think you kind of get that kind of full on upside. So just kind of be a little cautious about that. But 2260 will kind of be my upside target here that I see a little bit of resistance. But I do like that one. That's going to be a beautiful one. I know we already seen Amazon do it. We saw quite a few names run right into their split, but they did give you a lot of pain before they gave you that run. So that's something about being cautious about kind of buying too early because then you don't want to get theta eaten before the run up. All right. So that's just something to be cautious about. But other than that, today's kind of just more of a little bit of a digest. I think I pretty much started off the, the live here just saying that this is a time instead of panicking, instead of looking at your portfolios down, maybe look at these longer term charts, kind of how CJ is talking about, these targets that he's looking at. That's exactly what you want to be looking at right now. Look at the weekly, look at the monthly time frames, look at where you see prior breakouts, prior retests, especially kind of that confluence in a certain particular level. And that's where you want to look to see where you go long term on these names as they continue to pretty much decline within the next few days to few weeks here. All right. But other than that, I would expect pretty much more blood tomorrow, if I'm being honest with you, to close out the week on a bad note, as the market's digesting FOMC on a down note. So sentiment to me is pretty much on the downside, and then I would expect that reflexive bounce to the upside here come next week, if I'm being honest with you. Maybe we get that Monday to Tuesday, and then we see the reversal back down to the downside. So that's kind of where my mindset is right now. could we end up getting that immediate reversal tomorrow in certain names? It's entirely possible because that's why I say we may end up just trading in a range, and especially how they like to do that on a Friday and just screw premium. I don't see that. I don't see why not. That they kind of just put us, gap us down, maybe put us in a box, and then in that sense, some names end up continuing to bleed out in the tech sector, and some kind of stay elevated. So that's kind of another scenario that I'm kind of feeling about tomorrow. You felt the pain. Me and Bum averaged down 10 times. Wait, what? You guys averaged down? I'm assuming you're talking about Amazon. I'm literally assuming that, CJ. But the average down 10 times, well, I know your bankrolls are pretty high, but that's a lot of averaging down in this kind of environment. I know the Nimbus have been doing pretty well though. I think the Rapids, for the most part, in flow alerts, just to kind of comment about that, the Rapids have kind of been calling top, so be a little cautious about that. I know that's something that's been kind of struggling right now, so that's something to be aware of. But the Nimbus, I know that they've been pretty much bangers left and right. I think Jay was pretty much the first one to literally just calling that left and right, saying that the Nimbus have been bangers. So that's something to kind of keep on the watch right now in terms of, if you're looking to follow something and not necessarily trusting your own plays, your own instincts, I would say kind of rely back and fall back on the Nimbus. But biggest thing right now is keeping your position size to a moderate, right? That's pretty much the biggest thing, especially with all these exaggerated moves, whether it be pretty much overshooting to the upside and downside, as you saw yesterday's price action being so wild. Right now is where you have to be pretty much disciplined in terms of your position size. Now, CJ, on the other hand, he can average down 10 times because he can handle the pain. But those of you with smaller portfolio sizes, this is where I pretty much want to say and reiterate, be cautious about your position size. As much as I would say along with your stop loss. Your position size matters in this kind of environment, especially when you see how much the daily range is on a day-to-day basis. So if you're trying to buy calls on a weekly expiration, like you're seeing Microsoft go $7 in one way, it's hard to pretty much overcome that if you're buying calls and then you see yourself go down 80%. There's no guarantee in this kind of market environment with volatility index so elevated that you're going to be able to recover. So that's why I say just keep your position size to a moderate one in which you feel like you can pretty much, say, okay, I'm gonna put in maybe 80 bucks or so with small accounts that you can pretty much recoup that if you end up taking a loss. All right. That's just kind of scenario playing out. Diego, you want me to take a look at Neo? I'll take a look at it real quick for you. When it popped, I was damn CJ 800% after averaging down 10 times. Well, actually, I mean, I would expect that. I expected 1000%. You should have made 100% off of every time you average down. You're in Neo, July 15 puts. I like those. I know that Neo's been one that I haven't been a fan of it, if I'm being honest with you. I think there's quite a bit of downside on it. I remember someone actually had me look at this not that long ago. I'll pull up probably the daily chart. Let's see if we can take a look at the daily. I know that this still has a well-defined downtrend though. That's pretty much one of the biggest things that it has going for it. Now, here's the pretty much the flip side of that. If we do see any kind of reflexive bounce in this market, you do have maybe a little bit of room up into this gap fill that you see. I don't expect to pretty much test that downtrend resistance, but you do have a little bit of a gap fill kind of sitting up here at this 22 mark. I know they had pretty much an event last week. That's maybe something that maybe we see some upgrades in the coming days. I don't particularly like the name if I'm being honest with you. But if you see any kind of upside, I think that's what you're looking to play out of. Your breakout point that you're looking for is breaking over 20.60. You get a break over 20.60, then you can pretty much play this up towards 22 calls. But being that the fact that it's still in a well-defined downtrend, market environment is not playing nice with anything within the EV sector right now. I'm inclined to say that this is going to continue to pretty much break down. Breakdown level that I'm watching here is 18.5. You break down under 18.5, then I have this coming down to 16. All right. So 18.5, and then you come down to 16. That's about a $2.50 drop. Otherwise, you look for the break over 20.60, and you're playing this 22 calls up to the gap fill. All right. That's pretty much your two scenarios. But one of my kind of my pet peeves, I would say, is that if it has a well-defined downtrend, I'm not necessarily looking to pretty much catch the knife or so, especially in this kind of market. If it was a bull market, maybe be the case. I'd probably play it up to the downtrend resistance. But being that we're in a bear market, I'm not trying to play a reversal up to a downtrend resistance right now in this kind of market environment. I'd have to see the market really give us a beautiful bounce, see a meaningful reversal for me to pretty much try to play this to the upside, is what I would say. All right. Let's see what you say. If Tesla drops another six under 600, Neo should follow it to 12. I expect it to make actually, yeah, I expect it to pretty much break this low at some point in time. That May 12th low that's sitting at that 11.67, I expect it to fully on break that. I think Neo's actually going to $8 at some point in time. I don't expect this to pretty much stay elevated at all. But that play that I kind of gave out to the upside is kind of just a short term play in which maybe you see a pop out of this and it end up being quote unquote a pump and dump. All right. So that's pretty much the only scenario, but that's why I say pretty much giving you level by level. Break over 20.60, your immediate gap fill is pretty much what you're targeting to the upside. You break 18 half, you're looking to pretty much play it down towards 16. And then if you're getting further outdated expiration, like CJ said yes to July, then I don't mind continuing to just pretty much swing that. All right. So that's just beautiful. I like that one for the downside. But I wouldn't mind to see if the market gives us a nice reversal, being we're pretty much just flushing, and we know how the market likes to squeeze us. I don't see a reason why we don't touch that gap fill and then come right back down. All right. But other than that, I think I've been rambling on for quite a few minutes already. Let's see what the market does. The only thing I would caution again tomorrow is that let's just hope they don't put us in a box. That's kind of the only thing I worry about. Those of you, especially trying to do zero a day, if they put us in a box, just be wary of about that. Trying to go, crazy out of the money expiration playing 0 days. After you had such a drastic move yesterday, you had a drastic move to the downside today, it wouldn't surprise me to say that, you know what, maybe we get a gap down and they kind of put us in a range until we see if we get a meaningful reversal next week or we continue to bleed on next week. So that's the only thing I would say right now. I kind of get that feeling that we're going to get a gap down for what, whether it be something big or minor, and we get kind of put in a range tomorrow most of the day. All right. Diego, CVS. All right, I'll take a look at CVS and then we'll kind of wrap it up here for our session today, guys. Let me take a look at CVS. Damn, this thing actually died. I did not know this thing died that much. Yikes. I know that Tom's always been a big fan of CVS, but he had a hell of a run when he was just timing this left and right. And I think Avery was also on this train as well when this was just making a beautiful breakout. Let me actually just take a peek. Let's see the weekly off of this. I think the weekly kind of tells you a better story off of this. Yeah, the monthly actually tells you a way better story. If I were to tell you pretty much where this is actually coming back towards, this would be the level that I would particularly be watching for. It would be right around this spot. So as you see right now, you had a nice breakout off of this level back from October of 2014, right around this 81 to 82 spot before you made a fresh high right there. You broke down and you teetered this 82 to 81 level multiple times between the span of 2016 up until 2019 before kind of breaking down and then retesting. And that's the exact same level that you ended up bull flagging off of. Kind of gave you a nice little bull flag out here off of the monthly, and you broke out to kind of didn't even make it to a fresh new all-time high. But that was the level that you ended up breaking down. So I'm inclined to say that this is going to come down to 81, 82. Let's see if she actually holds there. I think that's the spot where you look to scale in if you're trying to go long on CBS. 81, 82, you try to go long there for an entry. If you break down even further, then you look to see if she ends up holding here down at the 74 spot. So that's another level of confluence between support to resistance through all of these years, dating back to 2014. So if she can't hold this 81 to 82, then 74 would be the spot that I'm looking at to, I would say, pretty much average down is the case. All right. But 81, 82, that's the level to pretty much remember, Diego. Wait for it to kind of come in a little bit more. And then that'll be the spot where I particularly tell you to kind of get an entry on that. All right. Just don't trade 0 day expiration. You can't and you can get out at a small loss. You are absolutely right, CJ. I mean, CJ's actually, he's preaching right now, and I'm sure he's actually done this from experience. We've all been there. I know that Tom, myself, Avery, all these guys on live, we've all been in that scenario where if you're playing 0 day, and especially when you go out of the money, kind of a little bit exaggerated, more than like maybe one standard deviation out of the money, you know, at some point in time, it's not going to play out well for you. And when you actually don't kind of obey your stop loss, that's going to end up being very bad for you. So that's just something, especially for those of you that are kind of new traders, that's definitely something you do not want to do because you're playing with fire. I'll tell you that right now. Threw a dart at SPY calls for tomorrow. I feel like we gap up to 370, 373 range, courtesy of Amazon puts, of course. It's entirely possible that we get a reflexive bounce tomorrow. I say that it's entirely possible. That's why I say it's kind of possible that we get that. I kind of say that we get stuck in a range. So if we get stuck in a range tomorrow, it's possible that we get a gap down or a gap up, and then they just put us in a range. Just the only thing that I'm saying is that I don't think we get a drastic move in either direction though, because of the fact that we had such an overextended move to the upside and now the downside today. So I just think our range tomorrow is just a little bit more limited, is all I would say. But either direction, I wouldn't mind. I think we can get a dead cat tomorrow and just get stuck in a box all day for that matter. All right. I've lost 100%, 100 times out of the money zero. That's actually where you actually have the most emotions, right? I think I've had more emotions trading on zero than the day than actually with my wife. That's kind of actually true right now. I've had more emotions on a zero day than I've ever she ever had for my wife. That's pretty sad. But I'm gonna leave it at that. We'll kind of wrap it up today's session, guys. Let's see what zero day actually has in store for us tomorrow. Just be cautious about position size again, and be cautious about zero day tomorrow, right? But I'll kind of wrap it up there. We'll call it a day. All I want is the volume spike to cash in on. You should be able to get that. Volatility index is still pretty much elevated, so you should be able to get a nice premium to pretty much get out of that at the worst case. I just wouldn't pretty much try to hold that all day so your premiums don't get eaten up. All right. But again, I'll call it a wrap. Appreciate you guys joining me on live here. Again, I'll be doing some more back end work kind of leading into the weekend. I want to say likely into next week as well. So that's why I haven't been on live too much. Kind of just getting some things taken care of for TFC so that way we can get some nice little fresh toys going back for everyone on TFC. As the market kind of rolls out this little volatility phase, we should get some nice toys rolling in as we hopefully get a nice reversal within the next coming month or so. All right. But appreciate you guys joining again. You guys have a great